Hey guys, alrighty. So we had quite the week here. I've been sick, unfortunately, so I didn't make a video the last couple days here. I wanted to make one yesterday just because we had such a crazy market day, but I was just really not feeling the greatest. So, looking at the weekly time frame, so coming into Thursday, I was really bullish off of the EMA support bounce. I was looking for an upside push, and really until the Fed speaker came out, and some people are saying it was the Russia stuff, whatever reason you want to believe that Algos dumped it. We were looking at a really bullish Thursday. Obviously, we had an incredible sell off into end of day. So today, coming into today, we had the unemployment rate, the UE rate that came out, ended up coming in at 3.8%, which honestly, really does further point to the fact that we're probably not going to get a rate cut, maybe at all, in 2024. Again, I really don't understand where Jay Powell is coming from in this last FOMOC meeting last month now, where he said that his base case was 3 rate cuts. I truly don't see that. I am truly surprised that he held so steady, that he didn't care about 2 back-to-back hot inflation readings. And now next Wednesday, we're going to get another inflation reading. And as of right now, the consensus is 3.4% year over year, which is a 0.2% increase over previous year over year. And core is projected to come in at 3.8%, which is a 0.1% increase over previous. So, that would be 3 months in a row now that we've seen CPI increase. Now, again, maybe Jay Powell is just expecting for something to break and to do his job for him, and he's just going to kick this can down the road as long as he can until that happens. But realistically, I truly just do not see, really any reason why we're going to get a rate cut this year. Right now the Fed swaps are even pricing in the highest probability being September. So, if you think about where we were at December FOMOC. Now, remember, coming into December FOMOC, I even said I don't think we're going to get rate cuts this year. I think we could even get a rate hike. I really still believe that too. And we were talking about maybe a January rate cut. That didn't happen. And then markets had almost 100% odds of a March rate cut at some point. And now, that's not happening. And then they said, we're probably going to be June, the highest odds. And now we're already looking at September as the highest odds. So, it's very interesting to see where we go. This CPI reading on Wednesday is going to be very, very big. Now, the one thing I will say about that CPI reading is we're almost set up like we were last time, where the VIX now, and again, a lot can happen on Monday and Tuesday with the VIX, but the VIX is at 16.02. That's a very, very high level. That's one of the highest closes since November, and we'll get to the VIX here in a little bit. But we're at a spot now where volatility is so high that we could, much like we did last CPI, we could just get crushed. Where even though the numbers are bad, we still drop the VIX and rise in the market just because of volatility crush. So tread lightly there. But for the most part, I think CPI is going to be very, very interesting next week. So taking a look at SPY here, we had our rising wedge that we've been trading in for, really since October. We broke that support again, so now that is gone. And you can see we really have a bigger bull channel, and this uses the resistance line right here. And again, that goes back all the way to September now. So we got a new supply at 523.18, which if we go over to the daily, we have 523.43. So that's a really nice correlation there. And then, we came down, we hard bounced off weekly 8 EMA support, really the first hard bounce we've had since back here in February. We did get a bearish engulfing candle. That's the first bearish engulfing candle that we've really had at all this whole time that we've been rallying. So, certainly an interesting potential top there. So really right now, if you look at the last about 6 weeks of trading, 509.52 has been support and demand, and then we got 523.18 as supply and resistance. So close over 523.18, and upside potential based on the channel is 537. Close under 509.52, and we're looking at this 20 EMA support, which does go all the way down to about 497.26. All right, now when we go over to ES here, kind of same exact setup. So we had our rising wedge. We did go ahead and break that support there. So kind of basically same thing here, last 4 weeks here is 51.80 as demand and support, and 53.11. Now, same thing here. If we go over to our daily time frame, we have the same support right here, 51.85, 51.96, and then 53.08. So, a lot of correlation here in this chop. Basically what I'm looking at with this bearish engulfing candle, first bearish engulfing candle since back here the first week of January. Interesting enough, this was also quarterly option expiration right here, and then the first week after that. So we could look at the same pattern here, or we could look at a downside move here, something to keep in mind. Basically going into next week, the bears need to get under 51.80 and under the weekly 8 EMA to then look for 50.15, which is where the 20 EMA support is going to be, or the bulls need to get over 53.11, and then our upside is about 54.57. Now, going over to the Qs, kind of same thing here. So we had our rising wedge. We did break that. So we're now really just in a bigger macro bull channel, as you can see here. And, we last week reconfirmed 445.72 as our weekly supply. Since doing that, really, if we look at this, we have a major consolidation, really going back all the way to January, if you think about it. So here, we could be getting a rounding top to come into the downside. But, we really have triple demand from 423.14 to 433.82. So, we came down, we bounced off weekly 8 EMA support and off 433.82. But again, this week we came up and we hard rejected 445.72. Now, when we go over to the daily time frame, you can look 446.38. Look at this rejection area. Same thing, major resistance. So, realistically, the bears are going to have a hard time getting through these triple demands, but if they do, and we can close under 423.14, we got a bigger drop down in this 396 to 400 area. But if the bulls can close over 445.72, we really could see 460. Now, going over to NQ here, same thing. We put a new weekly supply in at 18,561. We broke our rising wedge. Same thing. We got a really nice, beautiful bull channel here, though, and then a bigger macro bull channel, too. So, kind of same thing. We came down. We bounced right off 18,050, almost to the point, but right off of it. Bounced off weekly 8 EMA support. Same thing though, we have our triple demand area from 17,461 to 18,050. So, if we get through this, we could be looking at 16,450 to really 17,000 area. Now, if we can break through 18,560, really, I think 19,000 by end of month, maybe even middle of month, is 100% possibility. So, next week is a big week. We could be, like I said, seeing the rounding top to the downside, or this could just be consolidation before the next leg up. Now, the VIX, this is really interesting. I've been talking about it since about this week. I thought maybe we could be getting a big cup and handle to go higher. But you can see, we've been so coiled on the VIX for, really, almost 6 months now, really. We've been coiled, just sitting in this range. Really, if you look at this range on the VIX, this is basically a 24% range on the VIX. Super tight. So yesterday, we had that massive breakout. It broke us through the fall. We had a falling wedge right here. Broke us out through that falling wedge. So now, we're looking at a potential upside channel here. So if we look right here, we take this candle right here and go down. This is our potential new up channel we have on the VIX. So, we not only broke through, and this was yesterday, Friday, or Thursday, 15.55 to 15.84, which is major resistance. And you can see, we had not closed over that level since back here on November 1st. And that was pretty much the day this rally started. Today was really interesting because we came back down and we bounced almost to the penny off of 15.55, our previous reconfirmed supply, which is interesting because that really does signify that previous resistance is now support. This is back-to-back close over previous resistance, which is now support. If on Monday we can hold this level, our next major upside level is up in the 20s to 22s. Now, again, CPI likely does need to come in hot, and it probably needs to come in not only hotter than previous, but probably hotter than expectations. So, not just come in at consensus, but come in like maybe 0.1 higher than that. And that could be enough to send the VIX rocketing. But, we're really at a tough spot here because you just don't know if markets are, it's really weird because if you look at why the market dumped yesterday, now again, some people want to say it was because of Russia joining NATO and oil and geopolitical stuff. And a lot of people want to say it's the Fed speaker. Whatever your reasoning is, the market really dumped on, I would say, speculation. It wasn't even like a concrete reason to drop, especially if it was the Fed speakers. We've been seeing Jay Powell for weeks now saying that we're going to get rate cuts, we're going to do this, we're going to do that, while markets completely ignore the hot CPIs we've had for, really a couple months now. So it's really interesting to see where the market's at right now. It's really interesting to see the VIX continue to rise like this. And despite the fact that we got a 1% rally on SPY today, the VIX only closed down 2%, which if you consider the fact that it closed up 15% yesterday, very interesting to see that happen. So there was a big spike on the VIX towards the end of the day. So, people aren't quite as, I think people are a little more cautious this time. We've had this extreme bull euphoria where all we're looking for is upside. And I think markets are starting to be a little bit more cautious now. Now, going over to oil, so we have a major trend break in oil. So you can see here, going back to March of 2022, all the way down, we've been in this bear channel. And you can see we finally today, this week, broke out of that down channel. So basically a 2-year-long downtrend on oil has been broken. Now, next upside levels is 90.68 to 92.66. That is resistance from back here in October 2022 and then September 2023. If we close over 92.66, then we're looking at 98.5 and maybe even up to 120.75. Now, to the downside here, we can see 80.48 to 80.98 is our major support. Now, if you look at this, again, this all is going to make it extremely difficult for CPI to come down. Every month now we've been seeing that oil, since, if you go back here to December, oil has just been steadily rising. And with this really much a breakout really over the last month, 2 months, it's going to be difficult to see CPI come down when we're still trending like that. Now we'll go over to the dollar here. The dollar really, since back about in January, has just been consolidating. We got 102.716 to 104.54 area. I've been talking to that. I felt like one of the reasons that ES was so strong the last couple of weeks and NQ still showed weakness really was because the dollar was so strong. We really need to see the dollar weaken in order to give tech a rally, which we did see briefly this week. At one point, the dollar was down a pretty good amount, and then it recovered, and of course, that made tech struggle. So, right now, tech is kind of the dollar rather is just consolidating. But if we break out over 104.537, our next upside target is 105.801. To the downside, support is at 102.716. Now, no surprise to me here, the 10-year continues to break out. Now, again, if you look at it, the 10-year since about here in December has been in a steady uptrend. And again, back in December, that's when I said we likely are not going to see rate cuts. We're likely going to continue to have hot inflation. And of course, the 10-year is not going to unwind until they know for sure rates are going to be cut. Right now, the market and even Fed swaps are basically saying J Powell is wrong, which is super interesting because previous to that, the market said J Powell wasn't dovish enough. They actually, if you go back to December, when he initially said 3 rate cuts, they said, okay, 7 rate cuts. And now Jay Powell is saying, no, we're going to get 3 rate cuts. And Mark is saying, we're probably not going to get any, or we're going to get maybe even just 1 or 2. So, right now the 10-year's in a big breakout. The next major upside level, you know what? I don't have a level here that I should have. It should be right there. The next major upside level is 4.654%. Again, you go back here, that's back in beginning of November. That's when this rally started. If we see the 10-year breakout there, again, it's going to be hard for this markets to continue to rally. Support-wise, we got 4.074 to 4.191%. Now, going over to Bitcoin just real quick here, we remain in the up channel. We got a nice little bull flag working here. So basically 67K is really strong support and demand now, and 71.3 is really strong supply and resistance. So look for your breakout. If we close over that, breakout level is about 81,000. If we close under 67, we could realistically go all the way down to 50K. So, all right, guys, I hope you guys had a good weekend, and I will see you guys next week.